Good afternoon, this is Bob Iaccino coming to you from the CME Group's trading floor in Chicago, Illinois, talking metals. Let's talk about gold as it continues lower. New lows for 2018, 1248 and change. That's the lowest level of 2018. Gold is now down 9 of 10 sessions, as well as being down 3 solid weeks in a row. Very heavy selling pressure on gold. The volume has tapered off a little bit as most of the longs are pretty much out in terms of positioning. We might see a bump in open interest in new longs coming in the next couple of weeks or so, considering we're lower now than we were even in December of 2017. That's the matching time frame, but all of 2018, these are the lowest levels we have been at. The dollar may have something to do with it, but sort of indirectly when you go back to the subject of trade wars, tariffs, intellectual property theft, and everything else that's going on. China's economy is suffering. The Hang Seng now fully in a bear market, down 20%. There are concerns about growth in the Chinese economy, and one of the ways the Chinese economy can, or the Chinese government rather, can combat the weakness in the economy is to devalue the yuan, which will rally the dollar. And if the dollar rallies, that inverse relationship to gold will continue to put pressure on gold, continuing this downward move. So it looks like 1200 is in sight. I mean, it's $48 away. It's not going to happen tomorrow. But if these trade wars continue, that would be really the only thing that would turn gold around, because it might turn the dollar around, and that's really the only sort of bullish catalyst that could possibly happen to gold in the short term. Part of it is because geopolitics is not really a factor in the yellow metal right now. There's currently no real geopolitical reason to own gold. Gold is sort of a safe haven, but against certain things. It's not a safe haven against necessarily recessions. It's not necessarily a safe haven against hugely rising interest rates. It's a safe haven if there's a political system that's going to collapse, or a currency that looks like it might collapse, or some sort of broad-based, really damaging actual physical war, not trade war. Those are reasons that you might fly to safety of gold, and none of those are currently close. There are little skirmishes here and there, but in terms of a massive problem with war, a massive problem with a currency failure, or a massive devaluing of a major currency other than the yuan devalue would help gold if it was also going to devalue in the context of multiple currencies devaluing. That's not the case right now. So geopolitics is not an issue. Tough to find a bullish case for gold here. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.